Hello everyone, welcome back to my 100K in 1 year with options trading journal. This is week 18 and my profit right now at 58,000 and I'm almost completing my month 4 in 10 days. Next week I will finish my month 4. So I'm doing good. I'm ahead of my plan. So this week was a very busy week. Although I closed only 5 trades, actually, I opened at I think around 20 new trades, which I will share in a minute. So my monthly profit right now at $8,700 with 26 closed trades in the month of December. And my success rate overall cumulative from 144 wins, I closed 4 lost, and that made me 97% success rate. And my average return of capital is around 5.65% in a monthly basis because my trades are closing mostly around 15 days to 20 days right now. So let's check the analytics page here. By the way, this is my app. I built it for my own options tracking using. If you are interested, link in the below, completely free. And you can create your account and go to Trade Journal, upload your Excel files, or just enter your trades here. So in my analytics tab here, let's check some numbers. Right now I have 40 open positions. Like I mentioned, I'm closing my trades overall average 14 days. And right now my average monthly profit is around 11,000 and my weekly average is to almost 3,000. So let's check another calendar visual here. As you can see here, my third week in December, I closed total 5 trades with a 1 lost and 4 win, and that made me 922 profit of the week. So let's check week 3. So as you can see here in week 3, I made 21 trades. Let's sort them by strategy quickly. Here I open 2 cash secret put in Amazon and Robinhood, and my strike prices was around 200 and 105. So I'm comfortable to collect them if they drop these levels. I'm comfortable to buy them in these strike prices, and in return I collect almost $500, no, more than $500 from these 2 trades. And my expiration date is February for Amazon, and for Robinhood is January. Other than that, I open credit spreads. I opened 4 credit spreads and I closed 1. And my credit spreads was open on same day, 17th of December. There was a big drop in the market, and my strike prices is picked around like 15 to 10 delta. So I really like to be on the safe side by choosing like those levels. Like maximum I'm going like 20%. So I'm kind of aiming around $100 profit. As you can see, my entry price to this contract was 0.92 and I sold 3 contracts. So my aim is closing them at 50% profit. So it will bring me around $130 profit. And this is also same. I'm aiming like above $100 profit. So all of them is around like similar approach, like 10 to 15 delta, and some of them is like 2 months in the future, some of them is like 45 days in the future. I'm not going to go through all of the charts, but maybe I can show the Amazon quickly. So I open it on 17 December. So 17 December was this one here. Let me zoom a little bit maybe. So this one here, it is get close to Bollinger Band, and it went down from stochastic indicator from 20 level, and it was around 40 RSI. 40 RSI for me for Amazon is kind of sweet spot as when it goes down that levels, I like to open some put credit spreads, cash liquid puts, and maybe even long calls if it touches to the 200-day moving average or goes below the Bollinger Band. So that was my pretty much all approach here on 17. Most of them went down in the indicators, in RSI, in stochastic indicator. So I opened put credit spreads for those, and I will be following them in the following weeks. So for Microsoft, I had one Microsoft I opened on 21 November. Let's see, Microsoft 20 November should be here. Yeah, it went below the Bollinger Band and it was around again like 20 stochastic, and RSI went below even 30. I think this whole week I was opening new Microsoft. I had maybe 3 and 4 Microsoft I opened. I closed them on the way on this big jumps. I closed, I think I still have one, but this one I closed, let's see, on 18 December, right here in this jump, I was able to close it with 50% profit. I opened the contract at 0.8 and I closed 0.41. And I collected $110 profit with a 7% nice ROI. It is 7% because like my strike prices, my put credit spread was 5 wide, which makes like 500 maximum loss. And since I have 3 contract, my maximum loss on this one 1,500, and with the 1,500 risk, I earn $110, which makes it our 7% ROI. So I just want to explain the logic I built for this calculation in my app. So other than this credit spreads, I open some long calls and leaves options. I open almost most of them on 17. On 17, there was a big drop, as I mentioned, in the whole market, and Nvidia and Uber is one of my favorite stocks. So let's check the Nvidia quickly. 17 should be this one here. So there was this went down from the Bollinger Band, and it was again like stochastic, and the RSI was giving me signals to buy. I'm using my watch list here indicators. So I'm just refreshing and seeing like which of the stocks of my watch list is under the 20 or above the 80 stochastic, or oversold, or near or upper Bollinger Band. And I noticed that Nvidia is matching with my criteria to enter a position. So I did that on this 17 with 2 leaves call, which is expiring. Let me see this week's call. So which is expiring on 27. So I have like more than 1 year, and my strike prices was 130, and I paid for that 6,000 here and 4,000, almost 5,000 here. So Uber was the same. I open a 2 position. One is like in August expiring, which is like 9 months in the future, and this is one more than 1 year. And my strike price is 70 and 67 for those. So I will keep monitoring them. When they reach out 10 to 20% in a short term, I might take the profit. If they don't reach out at that levels, I might wait a little bit more, or even with more percentage profits, but we'll see. I will follow them in the following weeks. So other than that, I opened some poor man's cover call. I opened some leaps calls for S&P Global. I think I opened them around October after their earning call. There was a big drop, so I opened, and monthly base I'm opening this poor man's cover calls to collect some premium. This one 2 weeks expiration, this one 1 month expiration. So S&P Global this week went above the Bollinger Band and above the stochastic indicator. So I opened some covered calls in case they want to go down, so I can collect some premiums. If they go up, my leaps contracts will gain more than I'm losing from my covered calls. So, I mean, poor man's covered calls. So we'll see how this will go in the next following weeks. Here I opened some broken wings butterflies and diagonal spreads this week. So what broken wing butterfly is basically you're generating a debit put spread here, and as a protection you are selling another put out of the money, so for the downside protection. So I will show it in the option strat. This was my construction. Here I have a debit spread and additional a short put, and all of them is expiration on same day, which is 45 days in the future, and my upside is protected for the credit I collected around like above 400 by the time I opened this one, which was like 3 days ago, and it was giving $450 premium. So for the downside, I have 14 more percent protection for the Broadcom. So right now at the moment, it went down in 3-4 days, already 20% down. So I have an additional 14% protection for the downside. Even if it goes down around 10 to 12%, I will collect double amount of credit that I already collected for $400. So I really like this strategy when I'm not sure about the direction, because even though they are all down in the RSI and stochastic indicators, my favorite indicators, still, since there's a lot of discussion about operation margins of the Broadcom, so I want to add that additional protection for my trade. So I will see if the stocks goes move fast in the following days. I might leave it for just expiration, and I want to collect that full 400 profit without taking 50%, because if it goes above considerably, my break even will be around like 30%. So that's why I'm comfortable to waiting that full premium. But if it starts going down, I might consider taking the 50% profit without waiting this. But I will see. Maybe if it's by the end of the expiration, if it's around right here, I might wait for this big profit. But I will see how it goes in the following weeks. So that was my thought process on this one, and others are completely same. So I opened them for 45 days in the future. I opened them on 16. So here, another example, my downside is protected for 12%. Here the chart on 16 on this drop, I opened the trade. It was touching 100-day moving average, and indicators went down. So I collected 450 credit in this one, and again my upside is locked with that profit, and downside is protected for 12% decrease on top of this decrease on the stock price. So that was my thought process on this one. And addition to broken wing butterflies, I have diagonal spreads. So what diagonal spreads does, let me show you an example here. So basically in diagonal spread, I'm purchasing a long call in 4 to 5 months in the future expiration. And this one I opened on November and expiring in March. So it was like right around 5 months expiration. But since I'm not comfortable with that long call, and on that 24 November, market was so much down, so I want to add a protection for more downside. So I added short call in case the stock price continue to drop. Meanwhile, I'm waiting my expiration and my bigger profit of this trade. So I might collect more premiums here, which that happened actually. And on 24 November, I opened, and 16 December, I closed this short call. 24 November was right here. It was touching 200-day moving average, and indicators was very down, and even RSI went below 30 level, so which is very unusual for a stock like Microsoft. So I opened that spread here, and by the time is 16 December, Microsoft made another touch to the 200-day moving average, and on that day, my short call lose so much value, and it went all the way down to 2.33. And my entry price was $6 for that one contract, and I just buy back my contract with a $400 profit. So I really like this strategy here because like instead of just waiting your long call to get profit, so you are adding a protection here, and you can additionally collect this amount of profits. So I will see if the Microsoft continues sideways, I might consider open another short call on the way while waiting my long call bring good amount of profit. So it's like a poor man's covered call, but with a shorter time of period. So that same thing happened here in Netflix. This time, actually, I close my short call and I open another one on the same day. So again, my expiration is April, and I open a monthly short call against my long call, and I open two contracts and with $1 open price, and it went down all the way 0.43, which is like around 60% profit on this one. So I buy back and I get like $114 profit here. I opened this second short call in Netflix, but I didn't in Microsoft because at the moment I'm more bullish in Microsoft than Netflix right now due to the Warner Bros. Purchase all news. So that's why I'm expecting Netflix can go down during this process or sideways. So that's why I want to get this protection for my second short call. But in the Microsoft case, I'm more bullish on Microsoft, so I didn't want to open another short call before seeing how the stock will move in the next following week. And in the Broadcom diagonal spread, it was very same. I open for April long calls and for monthly short call against that, and due to the additional drop, so I opened the Broadcom on 14, I think 15. Yeah, right here I opened the diagonal spread, and it went more down on 3 days. So here I was able to collect $400 in 3 days because my short call went all the way to the $200. When I sold that for $600, it's almost like 60% profit here. So I collect that one, but again, I didn't open another one because I feel it is get some momentum. There was a huge buying on that day. So again, I want to see how the next week will continue. Based on that, I might just wait my long call, get some like 10%, 20% profit, and I can completely close my diagonal spread. Or if it continues to sideways, I might consider to selling another short call for 1 month expiration, and I can collect some more profits on the way while I'm waiting for my long call brings more profit to me. So I really like these two strategy while markets is feeling not strong enough and it might go sideways or go down. So that's why I want to open some protected spreads and trades this week. Lastly, I want to mention how I'm constructing them. So basically, I'm buying a long call in 4 or 5 months in the future around 40 to 50 delta. And against that, I'm selling a short call around 25 delta. So that Netflix example was my short call went to 10 to 15 delta and I was able to buy back with a 50-60% profit. Then I bought another 25 delta short call. I mean, I sold another 25 delta short call to protect downside. So that is my diagonal spread strategy, like buying 4 or 5 months in the future around 50 to 60 delta and selling short calls in 1 month expiration around 25 delta. Lastly, I had this Google trade here. I opened way back in the September and my expiration was 3.5 months in the future, which was this week. So I just let it expire with $100 loss. So what was my structure here? It is basically a ratio spread. I sold 2 put option and 1 buying put option. Difference with the broken wing butterfly was 2 selling put option was in the same strike. Profit profile on this trade was on the all upside movements, it was capped with $100 loss, and on the downside, there was a huge profit. So on that day, I just want to try this ratio spread. So on that day, 9 September, I think it was right here, it went a big jump here with a gap. And I was thinking, okay, maybe because it was like whole RSI was crazy around like 90 levels and stochastic was like 95. So I said, okay, like it can continue go up, but I will create this ratio spread in case it goes down so I can collect a big amount of profit. In the upper side, I'm just going to lose $100, even if it goes 50-60% above, I still lose only $100 from this trade. So that was not bad a trade, but yeah, that was a loss in my trades and it made 4 loss in total from my whole 4 months journey. But it is fine. I'm going to accept that loss and continue my journey. That was all from this week's trade updates. So probably this month will be kind of quiet. There's no earnings, like there's this Christmas week, and I'm expecting kind of low volume. But next month here, the earnings calendar is very busy. So next month with the whole like my 40 open trades, like long calls, I'm expecting a good profitable month in the January. But let's see. Thank you for watching the video. If you get any value from this video, please consider liking the video. I wish everyone a nice holiday week and see you next week.